2. It's Saturday, December the 14th. The market is closed all day Saturday, but here we are increasing our knowledge. We have 2 different stores. We have a lot of stores that we can actually read. Some of these stores was put up before, but we could go through different stores, find out what type of information we could pull. The Feds is very important to me. This was printed 17 hours ago. So I want to at least find out what we're talking about, what to expect next week's Federal Reserve meeting on interest rates. The Federal Reserve is widely expected to cut its key interest rates on Wednesday, but plans for future cuts are more up in the air. Fed official could give some insight into how the central bank is digesting recent economic data, showing stubborn inflation and a resilient but still cooling labor market. Expectations for more rate cuts next year have diminished, and incoming President Donald Trump tariffs are an economic wildcard that could affect the Fed's monetary policy. The Federal Reserve is widely expected to cut borrowing costs when it meets next Wednesday, and officials could shed light on how recent economic data might affect their decision on interest rates in the year. Financial markets are pricing in a 97% chance the Federal Reserve will cut Fed fund rates by a quarter percentage point to a range of 4.25% to 4.5%, according to the CME Group's Fed Watch tool, which forecasts rate movements based on the Fed funds future trading data. In the year ahead, such rate reduction could be sparse. The Fed rationale for cutting rates have diminished recently in the wake of reports showing inflation have stayed stubbornly above the Fed goal of 2% annual rate, which, while jobs remain relatively plentiful, the Fed reduced its benchmark interest rate in September and November after holding it at a 2-decade high for more than a year in order to subdue the post-pandemic burst of inflation. The Fed funds rate influences interest rates on credit cards, auto loans, and business loans. Today, high rates are intended to be something like sand in the gears of economic, discouraging borrowing and slowing down activity to reduce inflation pressures. The Fed mission is to not only fight inflation, but to prevent severe unemployment. Earlier this fall, a slowdown in the job market made Fed officials more concerned about the part of their dual mission, prompting a steep 50-point rate cut in September. Employees have slowed hiring, although have avoided large-scale layoffs. Economic projecting fewer cuts in 2025. The open question for Wednesday meeting are how the Fed will balance those 2 priorities in the future rate cuts plans, and what Fed Chair Jerome Powell will say about the outlook in a post-meeting press conference, while the rate moves next week and are but set to stone. Future cuts are up in the air. When Fed policymakers last made economic projection in September, they forecast trimming the rate to a range of 3.25% to 4.5% by the end of 2025, an entire percentage points below the anticipated level at the end of the year. Economists at Wells Fargo predicted the next round of projections due to Wednesday meeting will show only 3/4 point cuts in 2025 instead of 4. Economists at Deutsche Bank predict the projection aside, the Fed will keep rates on hold and not cut for at least a year. Moody Analytics forecasts 2 rate cuts next year. Trump policies are a wild card for the Fed. The changeover in presidential administration makes predicting the future a chancier business than usual. The trajectory of inflation in the economy could hinge on incoming President Donald Trump economic plans, especially the heavy tariffs he said he would slap on U.S. trading partners on day 1 of his administration. Economists' assumptions vary about how severe those tariffs will be, to what extent they'll be just as a negotiating tactic, and what effect they'll have on the economy. Many forecasters assume inflation will rise as merchants pass the cost of the new important taxes on to consumer. Complicating the implication for the Fed, tariffs could also hurt U.S. business and economic growth. which will push the Fed to cut rates to boost business to preserve the labor market. The challenge for the Federal Reserve will be to parse out the supply shock of tariffs for demand-driven trends in employment and inflation. Economists at Wells Fargo Securities wrote in commentary, all those open questions could push the Feds to be more cautious about future rate cuts. The potential for dramatic shifts in trade and domestic policy wrought by the incoming Trump administration is an added uncertainty and supports more wait to see approach from the FOMC. Matt Collar, an economist at Moody Analytics, wrote in a commentary. It's pretty interesting. I read a lot, understood a little. Yesterday, I finished my final day. I went big, went home. I actually lost $4,000 throughout my challenge. I was given $100,000, and I lost it on my last day of challenge because I was trying to catch up to the leaderboards. I finished 719, so I'm highly upset. At least I should never tried to revenge trade at the end to try to catch up to the leaders. Leaders, congratulations to you all. I'm so proud of you. You did amazing. Those people took 100,000 in a week to those numbers there. That was their final profit. So that's amazing to you all. Oh man, these was the prizes that we were chasing, searching for. All of those prizes there can start a whole new career in trading if they manage their position correctly and go into micros. That's all you need. That's bare minimum, and you can make it. You just have to be patient, diligent, learn the craft. Right now, Saturday, I could be doing back testing and figure out what I did. So many different things that they can do. If you want to learn, that's an email. But actually, here, CME Group. If you want to learn, you have that opportunity to learn in front of you.